folks, hope everyone's well. I've been working away in the background building a trading and investment platform and doing the help videos and code for that. So I've been away from the market videos for a while, but I thought I'd do a quick little market, or Bitcoin specifically, market update today, just to have a look at a few things that I've been looking at over the last kind of week or so, and give my view on where we are currently and where we could potentially go, as well as what might invalidate that as a thesis. So I want to start with the structure. Anybody who's watched my structure videos will recognise this structure on Bitcoin, and this shows the major highs and major lows from the top of Bitcoin to where we are at the moment. So for anybody who's not watched those videos, the major highs and lows, or the highs and lows that I'm interested in, are the traditional major swing points within the structure. So the major high is set when the previous major high is broken, and the low that caused that high to break is the major low at that point in time. So you'll see lots of interim high and lows in between when price is essentially stuck within that major high to major low range, but those are the major swing points that I look for. And if we look on Bitcoin from the top, you can see here that on the way up we had major high, major low, major high, and then as soon as the low broke, we see that major highs are respected all the way down and major lows are broken all the way down, and that presents us with that bearish order flow that we'd expect to see within a bear market. And over the last few months, so in March, we saw for the first time in 493 days, or since November 2021, we saw the first major swing high break within that structure on the way down. This was after a period that a lot of people were commenting could have been a bottoming structure. And I think this major high break, for me anyway, certainly in terms of the way that I look at the market, was the first bullish shift in daily structure within that entire time frame. Now that's supported by, currently anyway, the H4 structure. So H4 and daily are both bullish together. If I put the H4 on to show you how that looks, zoom in a little bit so you can see it. So you can see the H4 it had a little pullback in here where it flipped bearish again, which was just a daily pullback before it broke that high. But from that point, it's then broken again, set a new low, broken again, and still within the range. So this has very much seen that break low, break low, break low. So the H4 is in that bullish structure and still within its range. So I do have a Bitcoin position at the moment, and my stop is currently the low of this range, around about the 26.5 sort of area, and that's essentially been moved up as we go, because at that point, if that major low is broken, and by broken by closure rather than just by wick, if that's broken by closure, then that would be where I start to look for pullbacks to potentially happen. So that's the current structure as it looks. And if we have a look at the ranges within that, so I'll put the daily back on again, daily structure back on again. The daily range is here, and the H4 range is currently there. So the daily range is quite a large range, because this was the low that broke this previous high. So this low to the new high, or current high, becomes the range. So we can see price is quite high within this range. It hasn't pulled back to the 50% point or below yet. That still remains a risk, but in a bullish market, and particularly with the lower time frames are looking, I think that's a lower risk for now. I think there's potentially anyway, and we'll cover this in a second, there's more potential for us to see a little bit more upside to set what will be the actual daily structural high, before we then have a pullback lower into what would be around equilibrium of the range if the points of interest that I'm looking at were to play out. So that's the current structures, if we put those on. And if we look at the points of interest within those structures, just from a high level, from the daily and a weekly perspective, we can see that we ran into an order block here. So you would expect to see a reaction from there, which is this H4 pullback. This area, being an area you would expect to see a reaction from, supports the thesis that that's a temporary stop on a potential move higher. We've got another imbalance just here on the daily chart that sits above what is liquidity that's built above these highs here, so that's quite a good kind of area to look at for a potential major swing point. And then we've got a CME gap and a weekly sell side imbalance above. Now I'm not putting too much emphasis on those. I think we could go a little bit higher into those, but my initial point of interest for that is just above these highs around the kind of 32.5 to 34 sort of area. And if we drill down into the lower time frames, I can show why those are the areas that I'm looking at. So if we have a look at H4 and I put on the current structure that I'm looking at on the H4. So this is very much dropping down into the weeds of the H4 level. We've seen a few ranges create within the H4, some mitigation points within the ranges be set, and then we've seen it bouncing kind of between those ranges, or between those points within that range. So I'm going to put the point of interest back on so we can see. So this reaction here was inside that daily order block, so we got quite a strong reaction there, a structure shift on what would be a lower time frame. So this is not H4 structure, but it's a lower time frame structure shift, retest of an order block left within that H4 area, and then a move down. We saw that take this liquidity below this range, create a new range, and then kind of bounce around in here. But the last, since when is this? Since the 1st of May, so this week anyway, we've seen new ranges, breakout of the range, mitigation of the range, breakout, mitigation, and that's kind of where we're headed at the moment, in my opinion. So this order block here, I'm going to zoom in a bit so you can see it a bit better. This order block here, this little inside bar order block that came after this move up, so we got this strong move up, this inside bar, we moved, came back to mitigate what is a lower time frame range and another order block in here, moved up, stopped just around the same level as these previous highs. So you look at these three highs now, we've got 1, 2, 3 highs that are building liquidity above the market as shorts come in and start to place their stops above this. We've pulled back into this inside bar order block or a lower time frame range. We've had a reasonable bounce there to start, and my current thesis is that we will stop around about this area, maybe wick a little bit lower into the 618 kind of range, and then continue on to take liquidity above these highs. It's too nice to see these three highs so close, certainly with no closure above. I think we go and take that liquidity and move on beyond that to potentially, in the first instance, the 265 extension, or maybe even the 618 extension at the kind of 30.5 sort of level. That might see another small reaction off this order block. Now technically this order block is spent, it's been mitigated. We might see another small reaction there because of the liquidity at these highs, but then a small move down and then a move further on to have a look at the points of interest above. So that's what the structure and the lower time frames are saying to me at the moment. In terms of invalidation of that, if we were to see a move below these highs, below these lows, if these lows stopped being respected, I'd then start looking at areas further down, and we've got, for example, this small range on a lower time frame that was left unmitigated before, so we could potentially come to here before moving on. So that's in the kind of 28 to 28.5 sort of region. And there's lower ranges as well then here, which we just saw the kind of wick into, so down about the 27. If we fell below 27, I'd be looking at the overall thesis of higher prices being potentially invalidated. But for now, I think we likely see another move up. The invalidation for that is a move below the lows at 28.6. If we move below the lows at 28.6, I'd be looking 28.5 to 28. If we see a reaction there, we would be looking for higher prices from that point. If we were to fall any lower than that and fall below 27, I'd be looking at the potential invalidation of the overall thesis that we're going to talk about in a sec. So that's the kind of structure at the high time frames, and the lower time frame look at the points of interest that I'm looking at the moment. From a macro perspective, this is my current view on where we are within the cycle. So I think it's fair to surmise at this point, based on Bitcoin's 4-year cycle, based on the structure, based on the current bounce. So this level here was that daily structural high that we spoke about a second ago. That this is the start of a new bull market. That's the working thesis. That would be more probable. Now you can't say for sure that that's 100% the case, but based on everything that we look at from a data perspective, I think I would certainly say that's more probable than not. And validation for that thesis is pretty clear. As I say, if we start breaking down below that 27, and then we come down further and break this low here at 19, then I'd be concerned that we're going to see continuation to new lows. But for now, we're well above that range, and the structure certainly points towards higher prices in my view. So what we've seen within the structure at this point, or within the chart at this point, is this range created here. We came down to mitigate a previous order block, moved on and left this order block here on the range. So that order block is between 22.1 and 25.1. So that for me at the moment is the lowest unmitigated range from a macro perspective, from a weekly perspective. If we look above that, we can see the next unmitigated range in the way up is a breaker block that appears just above where price currently is. So the breaker being the high, low, higher high, and then that's broken is this lowest down candle within this range here before the move on. That's my current kind of thinking on where we're heading to, is that kind of 32.6. So that breaker block in its entirety is between 31 and 34.2, with the midpoint of that being 32.6, and 32.6 is my initial target for the position that I have at the moment. And if you remember where those highs were on the chart we looked at a second ago in terms of the overall macro structure of it, if I jump up to the daily again, they tie in fairly well with that level. So we are looking around about here. So these highs sit at exactly 32.6. So that ties in with that breaker block. It has this imbalance above on the daily, which could see us go into the top end of that breaker block. We spoke about the kind of 34-ish level within it, but that's the area that I'm looking at for a next impulse high. So those tie in pretty well in terms of confluence with the breaker and the liquidity on the lower time frames and the extensions on the lower time frames. Now what I would expect to see when we got there, depending on where we are within the wave structure, the Elliott wave structure, is a pullback from there, and then potential continuation depending on which one of the counts ends up more valid. And I've got two potential counts at the moment, both shown on the left hand side here. So there's a 1, 2, 3, 4, 5, which would see a potential kind of summertime top within the 37 to 44 type range, and that's on the kind of second or the first thesis there, where this is a 1, a flat expanded 2. We're currently in a 3, which would go into that breaker and that kind of 32.6 level, pull back to mitigate this range around that kind of 23-ish level, and then move on to those 37 to 44 type prices. And that's a fairly classic Elliott structure, measures well within the fibs and the projections. There is a potential second count with this smaller hit here being a wave 1, this being a 2 with a flat expanded 3, and us currently being in a 5 at the moment. The 5 also lands around about that 32.6 level where the breaker is. So there's a couple of possibilities there in terms of where we're at, whether it be the 3 with a 5 to come, or a 5 with a corrective to come, an ABC corrective to come. I think this area would still be a reasonable area to target for a correction in either event. It's also an area that's really easy or really clear to take risk off. So if price comes back into here, and it may well come back in very quickly, so I'm certainly going to have some orders waiting. if it comes back into here, the risk points are, depending on your risk tolerance, is either the bottom of the order block at 22.1. If it goes lower than that, it's invalidated, or the swing low at 19,586. That's a really clear invalidation point. So you've got good areas there to take positions with potential upside that would present really straightforward stops to get yourself out and protect your capital. So that's the thesis that I have at the moment. I think personally, the first arrow here is more likely. So complete a 3, 4 into a 5, and then have a corrective after that, because it fits a little bit nicer with previous time frames within Bitcoin cycles. It fits a little bit nicer with, I think, what we're looking at across markets, with a run into early, potentially a little bit late summer, and then draw down in the second half of the year, before we then start climbing towards the Bitcoin halving. I think the second one here would be a little bit too quick in terms of this being a 5 and then coming down. It would suggest a corrective before. But as with all these things, we need to play them level by level, have awareness of various different options, have an understanding that there's probably options or potential options in there that haven't been thought of or presented, and just watch the levels as we go. But that's certainly my plan for the moment in terms of looking at the lower time frames, taking that up into the macro time frames. Is I'm looking for another small move up into that kind of 32.6-ish area, maybe a little bit higher into the 33s. I pull back from there, and then at that point it's either continuation for a fifth of this macro cycle wave 1, or we're into our macro cycle 2. Either way, good locations to be taking probable entries around about this order block, with clear stop locations to manage risk below that. So that's just a quick update. Hopefully that all makes sense. Any questions, feel free to put them in the comments. Hopefully I'll get back to doing more of these videos as the platform build gets further along the line. Thanks for listening. Speak soon. Until next time, stay safe. My tea's it. Gotta go.